Sibusiso, South Africa has a well-rounded piece of regulation that I referred to earlier that allows South African pension funds to invest up to 5% of their allocations in the rest of Africa. Research shows most pension plans in the country have been unable to get anywhere near that allocation. Tell us how the EPPF managed to deploy all of its allocation of 5% into Africa.
Thank you. Maybe I need to give a little bit of context about EPPF so that then I can answer the question. EPPF is the Eskom Pension and Provident Fund. In terms of asset size, in rand terms, we've got assets under management just around 135 billion rands. In dollar terms, it's just almost $10 billion. You mentioned the GPF being the largest fund. It is the largest fund. I think they've got almost close to 1.8 trillion rands in terms of assets under management. But we always say that the GPF has got its own legislation. It's not regulated by the Pension Funds Act, which we fall under. We are supervised by the Financial Services Board, called the FSB in short. And under that regime, we are, by asset size, probably the largest fund in the country. And if you also look into Africa, at $10 billion, we are not a small player. There's a lot of other pension funds in Africa who are much smaller than us. So from a context point of view, so we are a defined benefit fund, which means that we've got long-dated liabilities, and then we have appetite to invest in long-term, for the long term so that we can try and match those liabilities with our investment horizons. What we've done as a fund is a few years ago, we took a conscious decision to create capacity within the fund. We are self-administered. We also manage some of the assets in-house. We've created capacity. We've got our own investment team. We've implemented systems, risk management systems, to be able to manage some of the assets in-house and to be able to evaluate some of the proposals that come to us. So this is a differentiator, because a lot of the funds, you find that they've outsourced everything and they end up depending on an asset consultant in order to make decisions because they don't have capacity. So if something that is out of the ordinary or something like Africa comes, they would depend on the ability of the asset consultant to be able to come and explain to the Board of Trustees what this means and how they should then approach that. There is obviously the issue of fiduciary risk for the trustees. So you'll find that if you've got an asset consultant who doesn't know much about a particular product, trustees are very reluctant to go against the advice of an asset consultant because if something goes wrong, then there'll be a personal liability on the trustees. So that tends to influence behavior as well. Coming back to the issue of Africa, we, again, when Regulation 28 started opening up and saying that you can actually allocate assets into Africa, we had already started allocating assets. We had used the 25% that was allocated for offshore, and part of that was already assets that were allocated into Africa. But what we then did was, after Regulation 28, we then became more focused to say the 25% we'll use for other offshore excluding Africa, and will then create a 5% allocation specifically to Africa excluding South Africa. I think it's important that I mention and emphasize excluding South Africa because South Africa is also part of Africa. So when people say 5% Africa, you may get the misconception that it includes South Africa. This is an allocation of 5% excluding South Africa. And what we then did is we did a lot of research to understand the environment in Africa. There was you mentioned a little bit that there is this philosophy of, again, looking at cities rather than investing in countries. So we actually did a lot of research. The advantage we have, again, is that we also have got our own team. So we then, even did site visits to make sure that we understand, if we talk about Abuja, how does Abuja look like and feel like? If we talk about Kenya, what is this thing called Kenya, and what's happening on the ground in Kenya? What are the liquidity issues? What are the stock markets looking like? What is the deal flow? Who are the credible people you can do business with in Africa? What are the different laws and regulations that are prevalent in doing business in Africa? Because you can make the mistake that Africa is one country, is like one country, you can do business the same way in one country to the next. In fact, a good example is if you go to Nigeria, within Nigeria, there's different regimes in terms of how you do business. So you need to understand that if I want to do business in Nigeria, in this part of Nigeria, this is how business is done. In the other part of Nigeria, this is how business is done. So we did all of that homework, and after that came to a conclusion of allocating 60% of the 5% to listed equities. And again, we then went, and by that time we understood who were the managers that we could work with. We went through a rigorous process to then appoint managers. We appointed 4 managers, and we allocated 40% into private equity. And within this 40%, we took a view that what we will do is we'll work with managers again, and where there's direct co-investment opportunities, we will also look at that. What we then did was, some of the challenges maybe that do happen in Africa. You mentioned the issue of the currency risk that you invest in. You've got rand-based liabilities. Then you've got to convert into dollar, and you've got to convert into naira if you're going into Nigeria. That also poses a risk. So we had to deal with all of those issues and all of those challenges. We had to understand liquidity issues as well. If you want to repatriate funds, how do you go about doing that? One of the, maybe just talking about funds, other funds in general, that some of the biggest challenges that some of the funds again face is the issue that, which we've also have faced, that on the private equity side, we've fully allocated, we've got commitments that we've made in full, but the deals that are bankable are very slow. So you find that we say we've allocated or we've committed capital, but we have not really deployed capital. As we can only deploy capital when there's a bankable transaction that is presented to us. And again, Africa being where it is, you find that a lot of the transactions or a lot of the deal flow is not at a ready stage. As a pension fund, we've taken a view and a decision that we will not go into greenfields, for example. So who is then funding that gap in terms of those greenfields? We will only look at something that's...
where TAS can talk to some of those points.
Yes, yeah. So we're looking at brownfields. So those are some of the issues that we are experiencing on the ground, that as much as we would like to deploy capital, we are unable to deploy it as fast as we would like to.
Perfect. Thank you, Sibusiso.
Doing business in Africa, you can't afford to be without Africa Investor.